Today I'm going to talk about a topic called Cross Collateralization. It's a very important topic because it does apply to a lot of consumers who are filing Chapter 7 and Chapter 13. Many times when you have a banking relationship with either a credit union or a bank, but most of the time credit union, you will deposit your money in the credit union or the bank. They will then, as a customer, solicit you to either get personal loans, credit card loans, car loans, or boat loans. Most consumers believe that when they have a credit card or a signature loan with a credit union, and they also have a car loan, that they have two separate loans. And they think they can file bankruptcy and pay just the car loan and discharge or get rid of the signature loan or the credit card loan issued by the credit union. That's not the case. Most credit unions and some banks have in their car loan package a large bold-faced paragraph called Cross Collateralization. That means that the car loan or the car itself stands for all loans. So if you want to keep the car and get the title, you have to pay all the money to the credit union, including the unsecured credit card. Many times in bankruptcy, we can negotiate so that you only pay the value of the car. So for example, if you have a $8,000 car and you owe $7,000 on the car loan and another $5,000 on the credit card loan, we could maybe negotiate a reaffirmation agreement for $8,000 so you can get rid of the unsecured portion of the debt up to $4,000. The other area that's important is to realize that when you put your money in the credit union and you've borrowed from the credit union or you owe them money, that they can set off your money to pay on those loans. It is extremely important if you're about to file bankruptcy and know that you have to file, you do not have any money in any banking or credit institution if you owe that institution money. They will take that money and offset it against the loans according to their right of set-off. This right of set-off allows them literally to take the money directly out of your account and apply it as such, which can, if you had, say, $3,000 in your account, which you're allowed to exempt, and you owed $3,000 on a credit card, and we're about to file bankruptcy, they can, if they get wind of the fact that you are filing bankruptcy or they're aware that you're having financial problems, they will set off that money, apply it to your credit card loan. So you would lose $3,000. If you had the $3,000 in another bank or credit union, it would be exempt. That is, you're allowed to keep it in general when you file your bankruptcy, and you would be able to discharge the unsecured or credit card loan or the signature loan that you might have. It is extremely important, therefore, that you do not have any asset banking or checking accounts in any lending institutions such as credit unions, banks, or finance companies if you're about to file bankruptcy. Make sure your cash assets are segregated in a different bank account. The bank account must be disclosed on your bankruptcy filing, but generally you're allowed to exempt it, as Tennessee allows consumers to have a $10,000 personal property exemption. But be aware of that fact, and be aware that most credit unions do have cross-collateralization provisions so that your collateral that you bought stands as security for all loans that you might have with that institution. So even though you think you might have one car loan, one signature loan. It's really all wrapped up into one loan at the end of the day. Thank you.